Here we are again to this little series about the Slingshot. This is the second type. Does it really work as they advertise? You know, Wall Street, when they say buy low and sell high, that is a nice theory, right? But does it really have to work like that all the time? Okay? Does it really need to have this strong move up and then retrace and then go up? And then how come that still people lose money? Because people try to buy at this point. It is true that you have to buy low and sell high, like here, for example, was going in a downtrend, you sell high, okay, just to make some profit. But how do you know where is the low? Well, the low can be found on smaller time frame when you have a suitable pattern. That's how normally you would conduct a trade. Now, for example, let's take this example, okay? You know it's going down. How do you know that you have to buy here, even if you go on smaller time frame, right, guys? So you go there, you might assume, okay, is the candle over now? Is it finished? Let me see. All right, candle up, wait for a retrace and buy. It goes a bit more, and then that's what happens. Probably you would collect 1-to-1 or break even, and then the pair suddenly takes you out. Obviously, this is about probabilities, okay? So I would like to tell you a bit more about this. I would like to show you this type of pattern in all its angles. And here again, just show an example of the textbook of some of the, I don't know how to say, some Fantasyland comments that when people do and they say, I bought here and then the pair went to the moon. I can guarantee you guys, it's not really true 100%, because normally you can get an impulse up, but where do you know what is the end? I have the 21 or 20 EMA as a reference, okay? But then I use small patterns at this point and market structure, context and momentum on the daily and also on the 4 hours to take trades from here. And normally you can also see that this is another ideal world slingshot. Impulse up, retrace, then up again. And downtrend, impulse down, retrace, and then down again. If you put the Fibo from here to here, probably will be, it's not really 50%, well, 38.2, just a bit more, okay? So let's look now at the real trading world. Thing is, guys, the institution, they know what we're doing. They know that obviously when people see an impulse up, they wait for a retrace. But what they do, they create small traps. That's why I prefer to deal, when it comes to this entry, I like normally the ABC. Basically, when I see a more strong impulse up, you see it. And then you see a strong impulse down, up and down, C, A, B, C. And again here, you will see this, A, B, C, right? Here, some other times, they could have a sort of channel, which is more like a complex pullback, okay, guys? Which is, if you look at Elliott wave principle, it would be more like a two zigzag being joined. And then from here, you take a trade. It will take a bit of experience. For example, here I could possibly take a trade. However, I have to wait. I have to check the previous price action before to see what he has done. That's why I say market structure, context, momentum is very important in this case. And another particularity of these patterns that we have to recognize when at those points, okay, those points of retrace here, impulse, retrace, and impulse, here you will never take a trade. So we have to find out some type of price action that manifests there under the form of patterns, okay? That means what trader normally do. Now, if we move this chart, for example, I will see the retrace down, okay? I don't know yet where the retrace is going to end. Then we see a candle up, right? So we would put a Fibo from here to here, and it's 38.2%. I like when it retraces a bit more, like 50%, but that is okay. So we have taken the first Fibo here, okay? And then if we go on the, let's not go on the 4 hours for now, let's stay here. So let's say the 38.2%, guys, was this one. And we also, let's mark it now like this. Since it was a red color, we would do it like that. So to remind the main Fibo, where was it? Now, if we scroll the chart, we start to see something there. Do we see a pattern? I don't know. What do you call that pattern? An escalator or something? I don't recognize nothing that I know. Then I could see something else, probably. And then what you do, since you have seen another impulse up, you might go up a bit more, so you might have to take a Fibo again. Then you do the Fibo. So, okay, guys, so the first Fibo from here, went here. and the second Fibo went here. So as you can tell, let me see, this is 38.2, it might go down a bit more. So probably there at the shakeout we could take another trade, let's say, but in this case, and the second Fibo, since it's smaller, which is the leg that is going up now, probably, the Fibo doesn't come always to 38.2. It could come to 61.8 or 78.6. Okay, so that's normally what will happen. Then you start to see some candles up, and probably, that could be the moment when you put a trade. Now, obviously, I will not put it because I'll just, like, we have taken the Fibo and it went to 61.8%. Since you must have placed an order there with a stop loss here, probably the trade should take off. And I'll show you what I mean by that. Here, for example, guys, is exactly what I meant by that. In the big Fibo goes up, impulse up, which was that one here, okay, blue candles, and then retrace down, so impulse, retrace, and then we don't know yet where to take the trade. So here, seen on smaller time frame, H4, retrace here, it would take another Fibo, which is on the other leg that is taking off, or looks like it's taking off. So Fibo here, wait for a retrace as I showed you before, and let me clarify this. So it will be much better if I put some more details in there. Is it transparent, guys? I'm not sure yet. No, it's fine. So this is the same on this one, this is the same, just I put some levels to remind. I could have put 61.8 or 78.6, but it does not matter now. And I'll show you also in a downtrend what it will look like. And okay, here we are. So in a downtrend, strong impulse down and then retrace up. Seen on the smaller time frame, roughly, guys. Okay, it's just roughly, to make a illustration of things. Then retrace up or correction, and then you put another Fibo here, and you take the Fibo of the Fibo, and it might retrace up to there. And then from there, there are so many other type of entries or patterns that can be taken, and obviously I cover them more in detail in the program that I have for this year. Very well, so if you like the video, please just lift that thumb up and also hit the YouTube button there so I can deliver more content for you. All the best for you guys in your trading. Thank you and take care.